Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It's Friday, and the market pulled back again, but not. It's definitely trying to digest it, the moves. But I definitely think that we're gonna see it move higher. Basically, everything was down today. All the indexes were down. The Dow Jones off just slightly, 0.55%. The S&P was down 0.29%, and the Nasdaq was off 0.13%. Interesting thing going on. Tidewater, though, this is a stock that I'm going to talk about a little bit here. That did break out, and it made a very nice move. It was up 7.82% on doubled the normal volume, about 208% volume. So very, very nice move on Tidewater, and definitely something that fortunately I was able to get in on it. I just had an alert set, and I was able to buy it. Let's take a look at Tidewater, TWD, Tidewater, and basically what this company does is they're an offshore oil. TDW, I think that's right. Yeah. They're an offshore oil service company. So like all these big rigs that are out in the Gulf of Mexico, that kind of thing. This company basically services them, and for some reason, there is a very large there's an uptick in this area, and it's interesting because the price of oil hasn't really been doing all that well. It's been moving lower, but the interesting thing about this is I think this is telling us that we're going to see some big investment in the offshore oil business. That's kind of what it's looking like here today. Basically, to show you kind of what I did, I got in it yesterday just barely. I had an alert on it, and I bought it right at the 51.88 line. This was a consolidation, and then it just boom, it pulled back down, and then it moved right up, and it's almost $60 a share. Now here's what I have. I'm going to probably try to, I don't know if I'm going to add to this position because it is extended. I expect it to fall. What I have here is I've set my stop loss here at 58. Now it's 58.61, so more than likely it's going to pull back on Monday, and I'll probably be out on a stop loss there. But this one was a very nice gap up. It's going to pull back. If I sell out, I'm going to wait for it to pull back. I suspect this is going to pull closer to the 21-day line. That'll give us another chance to get in. Currently, we're extended. We're at 10.84% above that 21-day line, so we're pretty far above that. So it's not really going to give us another opportunity. I was able to get out on this one just because I had it alerted, but this one is likely to pull back, and it may give us another opportunity. So what I would recommend on this one is to watch list this one. I would watch list this one for right now. So watch list TDW and buy it above the above 51. Well, just watch list this one for right now, and we should be able to get another chance if it pulls back to the 21-day line. But it's looking very, very good. So just kind of something to look forward to there. But definitely want to put that on your watch list. This area seems to be getting a lot of action. The offshore oil area. So it's oil services, not the oil companies, but the oil services. So very interesting, interesting thing here. As I say, we're down on the three major indexes. I wanted to show you kind of the golden rule. I keep harping on the show when to buy, but the question is when to sell. And the golden rule basically is if you're cutting losses, you always want to sell something if it moves 7% down from the buy point. But the question is, what do you do if, when do you take your gains? Well, if the stock goes up 20 to 25% from the buy point, that's where you want to start taking profits. Now, here's the thing. If it goes up 20 to 25% in less than 8 weeks, I know this is a lot kind of detail here, but this is in the book, How to Make Money in Stocks, A Winning System, Good Times or Bad, by William O'Neill. there's what they call the 8-week hold rule. But basically, just kind of putting it down to a nutshell, if a stock goes up 20 to 25% beyond the buy point, and this is coming out of a base, you want to take off probably at least a third. You want to start taking profits at that point. So just something to remember, when you're trading stocks is that, when you buy a stock, you want to have your stop loss set about 7% below that buy point, and then when it's going the other direction, when it's going up, you want to start taking profits at 20 to 25% above that buy point. And that just typically is the rule here. It is the rule. Now, if you buy it below the pivot, then you probably want to set it even tighter, maybe at 3% below where you bought it, rather than 7%. But 7% below the pivot, the buy point, is the best place to protect yourself. And if you're taking profits, you want to take profits at between 20 and 25% above that buy point. So just kind of a quick little kind of refresher thing here, but the golden rule is on taking profits. Take some profits if a stock gains 20 to 25%. You want to be starting to take some profits, and of course, if you want to cut your losses at 7% below that buy point. So just kind of putting that out there for everyone, and I think that that may make some sense. All right, let's take a look at the stock of the day. The stock of the day is Tidewater, and what Tidewater basically has done is that today it was up $4.25. It's a little bit extended right now, unfortunately, up about 7.82%. And the composite rating on this one is 96, which is excellent. So very excellent composite rating on this one. And the volume was 208 times normal. So very nice volume on that as well. All right, let's take a look at a kind of an idea for a trade that I'm doing, and this one is on a stock called Datadog, DDOG, and let me kind of put that over to the right one to see if no, I don't have it, but let me just throw up the live chart on Datadog, and then we'll get to the kind of the strategy for the trade. This is a stock called Datadog. It's in the software enterprise area. It's been very strong, but it is not, but it has. Oh, that's we want to do DDOG. Let's get that right. DDOG. There we go. Hopefully we'll get there. We go. There's Datadog. One thing I want to show you on this stock and why I am going to be buying it, basically as it comes up to the pivot. Okay, here it is. It's got the, as we all know. Oops. Let's see if we can get that. No, it won't let me do it. But right here is the. Let's see if it. Oh, come on. Let's see if I can put the. There we go. So this has what they call the golden cross on it. And that's it's really nice. Is that's when the 50-day moves above that 200-day. That's what they call the golden cross, and that is a very bullish sign. It's coming out of a cup with handle formation. The actual buy point here is 103.80. But here's what I did on this one. I did a buy stop limit order, and the way that works is, and I'll kind of show you that, is that as it's coming up here to the pivot, which is the pivot is 103, but where I'm going to buy it is if it moves above 100. And the way I'm going to do this is with a special order called a buy stop limit order. And the way that works is that you put it, see buy stop limit, the stop on this one would be 100, and then the limit would be 100 plus 5 cents, or 105 cents. So here's what happens. If the stock moves above 100, then it will activate this transaction, and the transaction will say, I will buy this up to $100.05. So what happens is if the stock pierces the $100 mark, you probably will get it for about $100.05. So the reason we do this is because we want to make sure that it's moving with an upward pressure. You see, if the stock on the open on Monday falls, it won't trigger it. The reason why, of course, is because it wouldn't exceed that 100. But if it opens Monday above 100, then it will buy it right about 107. Now, if it goes above that too far, then it won't buy it either. So it basically only buy it if it's moving through that 105 cents. So that's kind of what we're looking at. Also, if you look at the bottom of the screen, you'll see this 52-week high. This is the limit. This is the how far it is from its all-time high. Currently, we are about 16% from the all-time high. So this is looking pretty darn good. Let's see. Let's get some more information on it. The checklist on this one basically is the checklist on this one 78%. It's a little bit less than 15% below its all-time high. It's about 16.5% below its all-time high, but that's still, we're still getting very close to its all-time high, and the earnings per share percentage is less. And if we look at the if we look at the pattern recognition, we're coming up here to this cup with handle at 103. So very interesting here. I intend to buy it right about 105 cents. So as it's coming up there, and reason why, well, if we draw a reversal line here, you can see it's moved from sideways to an upward trend. If it moves above a little bit more, that's where I want to buy it. So this kind of gives you an opportunity, and this is how I'm going to make this trade on Datadog. So kind of an interesting one here. Here's currently what I'm holding, and then we'll get to the questions. Thank you so much for waiting. Here's what I've got currently. Down significantly on Tesla today. It was down about 2.11%. Fortunately, the volume was less, so that just tells me it's sort of digesting its gains. I'm hoping that's the case. NVIDIA was up today, but down on the volume as well. Again, the summer months are going to be lower in volume than other times of the year, but it was up about $4 a share. I hold NVIDIA. I was also up on Palantir, and that one is at 15.34. Not a whole lot. It's up about 21 cents. Alphabet pulled back a little bit. I was kind of disappointed in this one. I was expecting it to make a move higher, but oh well. On holding, this is the shoe company. It pulled back. Extreme Networks. Now I did buy some more. I made a buy on Extreme. Let's take a look at Extreme really quickly, see if it can give us another opportunity. EXTR, I think, is the symbol for that. Is that right? EXTR. Yeah, there we go. Okay, so let's look at the live chart for Extreme Networks, and then pump on over to that. There we go. This is Extreme Networks, and as you can see, we came down a few days ago, and we touched that 21-day moving average. We bounced above there, and then we pulled back again. You notice how these are kind of pulling back, and they're bouncing, and then they're moving higher. That's kind of what's happened here again. This is a pretty extended stock, but it has a 97 relative strength. Let's see how far above that 21-day moving average it is. Yeah, it's pretty extended, 12%, so it's a little bit extended here. Probably not a good place to open up a new position. What I did is, again, I waited until it came down to that 21-day line. That's where I did my initial buy. That was my half position, and then I made my second buy basically as it moved above this new level. So my average is pretty close to that 21-day line. If you can get your average cost to be within 5% of the 21-day line in an upward trend, that's pretty good. That's pretty good. But this did kind of move very solidly. It's got a pretty strong checklist, 89%. It's also in a good area. The sales weren't quite as good as they need to be typically, but Extreme Networks, they definitely put this one on your watch list. I think it's going to come out of base, and I think it's going to come roaring out. As you can see, this is the weekly chart, and it's just been an upward trend, pretty much even all the way back here in March of 20. So this is a very good stock. It's doing well. Last quarter, Sales were up significantly, and also profits were up. So pretty good stock here. EXTR, Extreme Networks. Definitely one that you might want to take a look at. All right, now let's see what else I got. I've got Spotify. That was disappointing. That was off. And then AEHR, that was up nicely today. I have a position in that, and of course we talked about a little bit about Tidewater. So let's get to the questions. Thank you for holding, so appreciate it. All right, let's look at Tesla for Sandeep. Thank you, Sandeep. TSLA. All right, what happened to Tesla today? Well, that's a good question. It looks as if Tesla kind of pulled back a little bit. It's kind of trying to digest this move all the way up to here. What happened is it came up, it got a little ahead of itself. This is why I'm always a little bit leery when a stock moves too steeply, because it'll almost always will adjust. So if we draw a trend line, that's kind of where we would need to be. So I do think that it's going to adjust, but I do think it's probably going to move higher. It's moving higher in after hours, so that's looking pretty good. I did make a buy as it pulled back today. I just bought 15 shares, kind of a mental health buy. Every time Tesla pulls back, I like to buy a little bit, especially because it's in this upward trend, and that seems to be working right now. Relative strength on this one, 96, so it's pretty strong. Top 4% of stocks currently, and we're getting close to. Let's see, when is the next earnings? The next earnings are in 12 days. So we've got earnings in 12 days. Now here's the thing. Because I'm up over 10% on this stock, I'm not going to sell it. But if you're not up 10% on this stock in 12 days, you might want to take profits and then wait to see how it trades through the through the earnings. Because the thing about earnings is that it can be very surprising. You can get a pullback. It's better to protect your profits and then rebuy rather than take a risk. So if you're not up 10% on Tesla at the next earnings, you probably should sell. Take your profits, wait, and see if there's something there to do. All right, let's look at Rivian for Jay. Thank you, Jay. I'm not currently in Rivian. I'm basically only in Tesla now. Really, the only two stocks that I believe are worth trading in the automotive sector are Li Auto and Tesla. This did move up significantly today. It bounced significantly, but the question is it buyable? So what I'm going to do here is I'm going to take and I'm going to draw a reversal line, and it definitely looks like it's definitely moved to an upward trend, which is a good thing. The question is, can you buy it here? I would be super careful buying this. It's very, very, very far extended. The last true real level here was about 22, and we're well above that. So I don't know. I don't know if I would buy this one. I would kind of wait until this thing pulls back, maybe to the 200-day moving average, maybe to 22. But I would if I was going to buy this one, which I'm not. I'm not going to buy it right yet. I'm going to wait for it to settle. I would buy it at about 22. That's where I would probably buy it. Buy it there. Okay, let's take a look for some of everybody else, and let's look at TikTok to see what we've got in terms of. There we go. Thoughts on new? Hi, Jim. Okay, let's look at new. NU. Let's look at that. NU. All right. And this is the chart for new holdings in NU. Good chart in terms of its trend. It's trending the right way, obviously, up. We always want to buy something as it's trending up. We want to basically always look. That's the first thing you look at is the stock trending up? This is definitely trending up. It does have a golden cross on it too. Just want to point that out as well. The 50-day moved above the 200-day. That's very bullish, and of course it's been bullish since. Now here's what you could probably do in this one. Don't quite know what's going on with this one, but it's in the foreign banking area, and I don't quite understand what this does. He says a Brazil-based company, so I don't really know what this company does, but it's looking pretty good. It's a relatively cheap stock, but remember, because it's in reals, it's trading on the Sao Paulo exchange. And then, of course, this is an ADR that trades in New York, so that's part of the reason it's going to have a lower valuation. Normally, I wouldn't buy anything below $10, but the real typically is a lower priced to the dollar. So it's quoted in dollars here, but it's actually traded in reals on the Sao Paulo exchange. So different kind of situation here. Here's how I would handle this one. I would wait for a pullback. If I was going to buy this one, enter it. I would enter this at the 21-day line, exponential moving average, and currently that 21-day line is at $5.52. So what I would do here with this one is that I would look to basically, I would say set a limit order at $7.52. And why $7.52? Well, that is where the 21-day line is. And basically the way this limit order will work is if this stock pulls down to that 21-day line, that's where it'll buy it. It'll buy it right there. And the closer you buy it to that 21-day line, the better. Currently, it's pretty close to the 21-day line right now. It's only 3.44% above the 21-day line. But if this thing pulls back, and it looks like it probably will, though it's up in the after hours, if this thing pulls back to the 21-day line, and it did there, you see, and then before it basically was at the 21-day line here. So it's touched the 21-day line here twice. It's probably going to pull back to the 21-day line again. That's a good place to buy it, because typically when a stock is moving like this, it will touch that 21-day line and it will reverse. So we want to get it as close to that 21-day line as possible. And the limit order for that right now would be $7.52. So that's kind of where I would look to. That's kind of where I'd look to buy it. Would be at $7.52, and hopefully I'm right about that. But that's where I think it would probably be the best. All right, let's see if we have some more questions. All right. Hi. Can you tell me what what the direction? The direction US 30 is going. Okay, yeah, let's take a look at US 30. I'm not sure exactly what that is. Let's see if I have the right. If I have that correct. No, it doesn't tell me. Let me just see what the stock symbol for that is. Okay. Yeah, let me see what the stock symbol for that is. Let's see if it will tell me here. Huh, okay. Well, I don't know. That's a good question. US 30 index. Okay, what is that? What is the US 30? What, I'm just trying to find the actual. I have a way of finding it. Okay, let's see if we can do it this way. No, I can't do that. So what I'm going to have to do here is probably just do the Dow, and that's going to be pretty much the same thing as the US 30. But let's look at the Dow index. And this is the Dow Composite, so let's look at that. So this is going to be pretty close to the US 30. Oh gosh, why am I not getting it? Well, let's put the diamond in there, DIA. this is 30 stocks basically. This is the Dow. This is the Dow, and so this is going to come and give us a direction on the US 30. It's kind of, I have to get that one. I know that you're working from overseas, and that's usually how it's placed. Okay, currently the Dow, which is this is the Dow Jones, is 30 stocks, and basically it's flat. If you look at it, it's kind of going sideways here. Let's take a look at kind of on the weekly chart to see kind of, yeah, it's really flat. The Dow is really flat. It's sort of in the middle of a range. It is moving up slightly, but basically the direction on it is flat. So not exactly the greatest thing there. Not exactly the greatest thing there. All right, let's look at Rivian, and this is for Sandeep. RVIN. And Rivian. See, RVIN. Thing about Rivian has a lot of money, and they're going to last a long time. I don't think they're going to be all that successful, to be honest with you. I think the game is already lost, but they do have a lot of money, and they're very well funded compared to other EV stocks. But I'm really, no, that's Lordstown Motors. That's another one. Hold on. So let me get the Rivian stock symbol. All right, Rivian. Rivian is RIVN. Yeah, should be easy. RIVN. All right, there we go. There we go, Rivian. There we go. Yeah, it's definitely shooting up. I mean, but the question is, I wouldn't buy this. I just didn't. I think this is a to be honest with you, I think this is a short squeeze. Let me take a look to see if I'm right about this. Yeah. See, here's the thing. Short interest, 7.2 days plus 9%. This is a short squeeze. What happens is so many people shorted this, and now they're having to cover their shorts. So this isn't real. This is kind of what happened with GameStop. People are shorting this. They're having to cover their shorts. I wouldn't get involved with this. There's a lot of shorting going on this stock. Just very tough in a market like this. Very tough to see. Now let's figure out how much. Let's figure out how much of the stock is short, and I'm just going to go here and getting the calculator up. Let's see. There we go. Because I want to see how much of this Rivian stock is short. Let's see if I can put that in there. Okay, so, okay. And gonna go over to the calculation of the short of the short interest. And so I'm going to put that up on the screen here. Yeah, there we go. All right. So here's we go with the short interest. Let's see. Currently on Rivian Motors, there are the average daily volume for this is, and I'm going to do this in thousands. On shares is 223. Okay, that's the average daily shares that it trades multiplied times the short interest. The short interest is 2.7 days. So currently they're about an average of about 87 million shares that are short. If we look at the total outstanding shares here, it is 521. 0.000. So yeah, see, here's the issue that we have with Rivian. Rivian is about 16%, 16, almost 17% of the stock is short. So basically, what's happening here is that the stock is heavily shorted, and this is one of the reasons why we're getting a volume spike like this. Normally, what's causing this to move up so much isn't the fact that Rivian stock is all that great. It's that, unfortunately, it is short. And so here's the issue with Rivian, and that is, it's this is an issue. So basically, what's going on here is that, and if we pull the calculator over here so we can see it, I guess you can't see it. I guess that's not going to work. Well, I tried. It's where you can see it on TikTok, but you can't see it on the other one. So basically, what I'm doing here is I'm calculating the amount of short interest. The amount of short interest is, there's 521 million shares in the float, and we have approximately 16% of that is short. So anytime you get above about 10% short, it is a short squeeze whenever you have these issues, whenever you have these kind of spikes like this. That's exactly what's, I believe, happening here. And if you look at the daily chart, this is the reason why we're getting this big short. We're getting this big spike. This is people, not because the stock is doing so well, but because the people are short the stock. They're having to cover it. It's gone up just a tad, and they're getting margin calls, and so I would not be in this stock. That's just my opinion, but I think I'm pretty right on this one. That's really the situation that's going on. It's a short squeeze on Rivian, so be very, very careful. All right, let's look at Baba. Of course, this is this is Alibaba. This is the stock that Jack Ma was the former CEO of this. The Chinese government imprisoned him. I'm not really very excited about stocks where the government is imprisoning their leader. I don't like that. That's a reason for me not to trade a stock, to be honest with you. We did have a spike here. Earnings are close, but this has got the death cross on it. It's where the 50-day moving average has moved below that 200-day average. This is showing weakness. The relative strength is moving up a little bit, 16, but still this is in a downward trend. If you look at it, I just probably wouldn't touch it. Yeah, this is in a downward trend, not the kind of stock that you want to be in. They've had declining sales for the last 1, 2, 3, 4 quarters. So I just wouldn't be in this one. I just think there's just awful much better stocks out there, really. There just really are a lot better stocks out there. All right, it definitely had a high volume, but I agree with you, but I just think that this is something that part of the reason, again, is the short interest has gone up on this one. People are shorting this stock. I'd be really careful with it. I would not be in the stock. See, there's two ways a stock can go up, obviously, and one of them, of course, is obviously people are investing in the stock, but the other way is the short interest, where people are covering their short positions. So, and I definitely think that is what's happening here. So that's kind of my take on it. Can you see this? Yes, I can. I'm just trying to see everybody here. Okay, let's see. What is a short squeeze? Okay, well, what a short squeeze is, let's kind of go over that again, is that when you short a stock, what you do is you borrow shares of that stock, and then you borrow them, and as long as the stock continues to move down, it doesn't move up, you don't have to cover your position. You don't have to cover. Now, if the stock starts to go up and you're heavily on margin, then you have to buy those shares to cover your position. That's called a short squeeze when that happens. So that is the case. That's what happened with GameStop. GameStop was going down, and basically the big institutions were shorting it. Now, the reason that one was different was because people decided they wanted to screw the big institutions, and they continued to buy it even though it was going down, and it caused short squeezes. These short squeezes are what hurt the people that were shorting the stock. So that's what I think is happening with Rivian. I think that Rivian is actively being shorted. So that's kind of my take on it. Alrighty. Well, we're pretty much out of time here on everything. Just wanted to make the appeal again to smash that like button. Really appreciate it if you could smash the like button. It really helps us out. I keep saying it every time, but it just does. It gets us out there. I don't think I'm getting enough. We're not getting enough views on this just because the people that see this show seems to really love it, but nobody else is seeing it. So I need you to smash the like button to help us get more views on this one. So important. And then I'm going to try to figure out a way to get out to more people because I know that I have some very great loyal followers. It works really great. But a lot of people don't see the show, and I think they would like to see where they can make money, where the buy points are. And that's why I'm trying to put out there for everyone that's taking a look at me on the show. I so appreciate everybody that does take a look. Also, if you're on TikTok or Instagram, please, if you could, jump on over to the YouTube channel, and if you could like that YouTube channel, that would super help us as well. We need you to subscribe so that we can stay on the air. I need to be able to stay on the air, and part of it is having enough people subscribe to YouTube. So please smash the like button if you're on TikTok, and if you could jump on over to Dallas Trading Floor on YouTube and just subscribe to that, that would be super. It's easy to get on over there. The address is youtube.com/Dallas Trading Floor. Let's see if we have any more questions here. Oh, snow. Yeah, let's take a look at Google. This is the last one. Let's take a look at Google before we head on out. GOOGL. This is the A series. I trade the C series, but essentially they're the same. But Google is, it's looking like it's getting some support at the 50-day line, which is, normally we want to trade something that's really hot. We want to trade it at the 21-day line, but the 50-day line is fine. As you can see, it's tested the 50-day line once there. It tested it. It tested it on Wednesday, and now it's going to come back down. I definitely think we're going to get a reversal here, but right now, as you can see, if we draw that reversal line, that is essentially a we are still in we're still just in the downward trend. I think it's going to move out. It definitely is. Look at that in the after hours. It's starting to make its move. This one potentially could be a bounce here. Usually it'll come down and then it will bounce up. So that's kind of what I'm expecting. That's what I'm expecting on Monday on this one. But Google is, I'm sorry, that was Alphabet. I wasn't showing Google. Let's go show Google. I was doing Alphabet there. Wrong answer. Okay, so here we go with Google. Hopefully this will give us, yeah, there we go. So Google, the same thing. We're coming down. Yeah, we're coming down to that 50-day line, and we're bouncing. And so I definitely think we're going to bounce higher. It's moved a little bit higher in the after hours, so I definitely think this is going to probably move in the upward direction on Monday. So it's looking pretty good. You can definitely size the position here. We're very close to the 21-day line, and let's take a look. Yeah, we're just below it. Just a tad, just 1% below that 21-day line. Not a bad place to enter a position here. One thing that is a little concerning, though, is we do have a relative strength line moving lower. I don't really like that, but I definitely think we're going to get some support at the 50-day line, so not a bad place. Also be wary, we're coming up on earnings here. They're in a very few days. Here's the thing. If you do start a position and you're not up 10%, you should sell it before the earnings. You shouldn't go through the earnings if you're not up 10% on it, just you should take your profits and then revisit it later. The earnings are due on the 25th, so we have a little bit of time, but you be wary of that. If you do buy it, and let's say you're up 8% in right before earnings, I would sell it, wait for earnings, and then buy it back, because it could definitely go against you, and you don't want that to happen. So, but it's looking pretty good, and definitely think it will move. It will move higher. All right. How much of your portfolio do you put in each trade when day trading? I don't day trade. I'm a swing trader, and I do sometimes will enter a position and then close it out before the end of the day. But typically, a day trader, I am not. I'm basically looking for a move. For a move, and I have a special spreadsheet that I use basically to cover that. I'll show you kind of what I mean there. I'll give you kind of a look at kind of what I do. I have a spreadsheet that I'm going to probably be putting out for everyone. I'm probably going to charge for this one. I haven't quite done all the programming on it, but basically what it does is this covers all my positions, and then I have a color-coded system that shows how much I'm profiting in each stock. As you can see, I'm mostly positive. Now my average hold here, if you look at this 36 days, I'm 36 days on Tesla, and I'm up, well, this is on this Tesla position, I'm up 10%, so I'll hold that through earnings. Same thing with this Tesla position, I'm up 14% in 36 days. 29 days, I'm only up 1% here. I'm more than likely to sell this one, and I'm up 18%, you see, on this Tesla. But these positions I'm down on, so what I'll do is, if this moves beyond 7% down, I'll be selling these. For instance, today I'm up on Tidewater, I'm up 8.7% in 2 days. So that's pretty good. So this is how I track it. As you can see, currently I'm up in this tranche in this month, I'm up about $7,800. So yeah, definitely something that that you can see. Let's see. I'll show you that just really quick on, so you can kind of get a gander at it, and then we'll call it a day. So let's see if I can move over to that spreadsheet. And this is what I do. I use a special spreadsheet for this. There we go. All right. Then hopefully you can see it. There. Takes a little bit of time, but this is kind of how it operates here on the spreadsheet. And again, I'm going to probably be making this available for purchase, hopefully, once I get the bugs out of it here. But it shows my profit and loss. This is my average day holds. You see, some of these, I've held this one for 9 days. I'm down 4%, but for the most part, I'm up an average of 8.46% over a period. My average hold is it's about 34 days, and I'm going to hold it for about 31. Some of these I've held it longer. Like for instance, I've held Palantir here for 51 days. I'm up 5.4%, so that's pretty good. But if I come close to earnings, I will sell it. I will definitely sell that one if I come close to earnings. So that's kind of how I do it. Hopefully I'm going to have some more kind of stuff to like position size calculators and other things that will let us take a look at things. All right, Sunil, last one, EXP. See if I can do that. EXP. Let's see if I have that one. There we go. So this is Eagle Materials. This is looking pretty good. Look at this chart. It's moving up nicely. The buy point 152.15. We're pulling back to the 21-day line. Here's what I would do on this one. It does look like it's going to pull back to that 21-day line. If you're going to buy it, we are pretty extended, so it's you definitely don't. It's kind of risky to buy it here. This is a secondary buy point. The ideal place, of course, would have been when it moved above 152, and that was right basically here. That was back but at the end of April, basically April 30th, that was the time to buy it because it moved above that pivot. Since then, it's kind of stayed on that 10-day line. It's now pulled back below the 10-day line. It's testing the 21-day line. It's tested it once, twice, 3 times, 4 times. So it's tested it 4 times, and it probably will pull back to the 21-day line. Here's what I would do on this one. If I wanted to get in on this one, it's a little extended. I probably will not be buying. I wouldn't be buying this one, but if I did, I would buy it right at that 21-day moving average, and that is about 176. So the way I would buy this one would be I would buy it at limit order at 176. So that's where I would buy this. And what I would do is I would just good till cancel, limit order at 176. And this is on Eagle Materials, symbol EXP. That's where I would be. That's where I would be buying this. That's where I would be buying this one. So, all right. Thanks again for everybody watching, and smash the like button. It super helps us again. So, you know, the big smash on the like button, that would be great if you could do it for us. Also, go to our website, www.Dallas Trading Floor, to sign up for the free action trade alerts. That'll jump you right over to the beacons page and get on that list. I'm going to be, we have, almost 5,000, a little over 5,000 people are on our list currently. We want to be at 10,000, hopefully in a few months, and that is free. So just jump on over to www.Dallas Trading Floor. I'll be back on Monday. And till then, everybody, happy trading, and hopefully I'll have a nice watch list for you on Monday. And but till then, we're an upward trend, but keep your powder dry. We're going to get some opportunities. We've been in a downward trend for a long time, and I definitely think now is the time to start broadening things out. But the market's looking good, and we're moving up, and we're in an upward trend. So we want to be probably at least 50% invested right now, and maybe up to 75% or more. I'm currently over 100% invested. I am on margin. So I will see you on Monday. Happy trading.